Welcome to the Deep Dive, your shortcut to being well-informed.
Great to be here.
Today, we're digging into Swaraj Engines Limited. They've just put out their Q1 results.
That's right, the unaudited financials for the quarter ending June 30th, 2025.
And our mission, as always, is to unpack these numbers, figure out what they really mean.
Get beyond the surface.
Exactly. And there's a big headline right off the bat. Swaraj Engines reported an all-time high quarterly profit before tax, PBT.
Yeah, that definitely catches the eye.
Just quickly, before we jump in, all the figures are in Indian rupees, and a crore is 10 million. Just helps frame the scale we're talking about.
Good point. And, these quarterly updates, they're so important for tracking a company's health, its direction.
Even though they're unaudited.
Well, yes, they're unaudited, but they have gone through what's called a limited review by the auditors.
Okay.
So it gives you a pretty reliable snapshot, a quick look at performance, without having to wait for the full year-end audit.
Yeah.
Helps everyone stay current.
Right. So a timely pulse check. So this all-time high PBT, what's your first take? What makes these headline figures stand out so much?
Well, look, the number itself is impressive. Ours, 67.17 crores for Q1 FY26. That's April to June 2025.
And how does that compare?
Last year, same quarter, Q1 FY25, it was ours 58.03 crores. So that's a really significant jump.
Yeah, quite a leap.
And it's not just the PBT. The press release highlights their best ever quarterly engine sales volume, too.
So volume and profit hitting records simultaneously.
Exactly. Which, suggests not just strong demand out there, but also that they're managing things efficiently on their end.
Okay, that's really interesting. What other numbers, maybe digging a bit deeper, support this strong performance story for Q1?
Yeah, if you look a bit broader, the trend holds up. Net operating revenue, up 15.8%.
Okay.
Reached ours 484.11 crores. That's up from about 418 crores last year.
Solid growth.
Definitely. And operating profit, or EBITDA, that's a good measure of core operational profitability, right?
Mm-hmm.
That increased by 15.2%, hitting ours 67.4 crores. Last year it was around 58 crores.
Okay, so profits keeping pace with revenue growth.
Pretty much. And then the bottom line, profit after tax, or PCT, that's what's left for shareholders. Also strong growth there.
How much?
It reached ours 49.97 crores. That's a 15.7% increase from the 43 crores or so last year. So yeah, put it all together, it's a very positive picture. Financial strength, operational efficiency, it all seems to be there.
So with these really impressive top-line numbers, what do you think is actually driving this? What's the engine behind this strong performance, so to speak?
Yeah, the engine of growth.
Yeah.
Well, it really seems to be the sales volume, no question.
Okay.
They saw, get this, a 17.2% increase in the number of engines they sold.
17%, wow.
Yeah, hit 49,040 units in Q1 this year. Last year, same quarter, it was just under 42,000 units.
So that's a huge increase in actual engines going out the door.
It is. And it's a pretty direct indicator of strong demand for their main product.
Yeah.
And that demand, well, it comes largely from their key customer.
Right, that brings up their business model. Maybe worth quickly explaining for anyone not familiar, who is Swaraj Engines, what's their place in the market?
Sure. So Swaraj Engines Limited, they've been around since 1985, based up in Mohali, Punjab.
Okay.
Their main business is making diesel engines.
Mhm.
Also components, spare parts for those engines, pretty focused.
And their main customer, you mentioned.
Yeah, this is absolutely critical to understand. They primarily supply engines to the Swaraj division of Mahindra & Mahindra, M&M.
The tractor giant.
Exactly. So Swaraj Engines' performance is really, really closely tied to how well M&M's Swaraj tractors are doing. It's a very direct link.
Interesting.
And it's worth noting, in their financial disclosures, they report as a single segment.
Meaning
all these activities, engines, components, spares, are just grouped together.
Mm-hmm.
It's because the risks and returns are similar, and that's how they manage it internally. Standard practice under Ind AS 108, the accounting standard.
Mm-hmm.
But it just highlights how focused their core business is.
So basically, M&M tractor sales booming means Swaraj Engines does well.
That's pretty much the core relationship, yes.
But does that create risk? I mean, relying so heavily on one big customer? Or is it more of a strength, a stable partnership?
That's a really good question. It's often seen as both, bit of a double-edged sword.
How so?
Well, on the one hand, yes, it provides this incredibly stable, large customer base. Operations are streamlined. Demand is predictable to an extent. That's a huge plus.
Right.
But on the other hand, yeah, their fortunes are very closely tied to M&M's strategy, M&M's market performance, any shifts they might make.
So there's dependency.
There is. But given M&M's dominant position in the Indian tractor market and the fact that this relationship is so deep and long-standing, I mean, M&M relies on SEL for a critical component too.
Oh,
And it's generally viewed more as a strategic strength. Stability over vulnerability, perhaps.
okay.
And certainly, these latest numbers suggest the demand flowing from M&M is really robust right now, which translates directly into SEL's growth, as we're seeing.
Let's maybe peel back the layers on the financial statement itself a bit. We have the revenue, we have the profit. How do the expenses fit in to get us from one to the other?
Right, okay, so think of it simply. Total income for the quarter, we said, was around Rs 489.76 crores.
Got it.
Then you take out the total expenses, those came in at Rs 422.59 crores for the quarter.
And what makes up those expenses mainly?
Well, the biggest chunk, as you'd probably guess for an engine maker, is the cost of materials consumed.
Raw materials, parts.
Exactly. That was Rs 373.27 crores. Now, what's interesting here is, despite selling more engines, their ability to manage these input costs seems pretty solid.
Ah, so efficiency again.
Could be, yeah. Maybe good supply chain work, bulk buying benefits, that kind of thing. It's likely contributing significantly to that record PBT we talked about.
What about other costs?
Labor.
Employee benefits expense. That was Rs 13.22 crores. Seems pretty stable relative to their output. So you take the income, subtract all these costs.
And you land at the profit. You land at the profit for the period, the PAT, of Rs 49.97 crores.
Okay.
And that also gives you the earnings per share, the EPS. Basic EPS was Rs 41.14. Diluted EPS pretty much the same at Rs 41.13 for the quarter.
So it paints a picture of a well-oiled machine, really converting that strong demand into actual profit.
I think that's a fair summary, yeah. Seems like a well-managed operation on top of strong market conditions.
Okay, let's shift gears slightly. Trust is huge in financial reporting. How were these numbers actually put together and checked? How reliable are they?
Good question. There's a process. First, these results were thoroughly reviewed internally by the company's audit committee.
Right.
Then they were formally approved by the board of directors. That meeting happened on July 15th, 2025. So you've got internal checks and balances.
And then the external auditors, you mentioned a limited review earlier. What does that actually involve?
Yeah, so the statutory auditors, BK Care & Co., they performed this limited review. Now, it's important to understand, it's not a full audit.
Less extensive.
Exactly. A full audit aims for what's called reasonable assurance. A limited review aims for moderate assurance. It involves fewer procedures, mainly inquiries and analytical reviews.
Okay, so what's the takeaway from their review?
The crucial point is what they didn't find. They stated that nothing came to their attention that made them believe the financial statement wasn't prepared in all material respects according to the relevant accounting standards.
Which is in AS34 for interim reporting.
Precisely. Or that it contained any material misstatement. So basically they're saying, based on their limited procedures, the numbers look fairly presented according to the rules.
So while not the gold standard of a full audit, it adds a significant layer of credibility.
Absolutely. It provides external validation that things appear to be in order based on established accounting principles. It definitely increases confidence in these interim figures.
Which raises an interesting point for you listening. How does knowing about these review processes, like a limited review versus a full audit, actually affect your trust when you look at a company's financial reports? Something to think about.
Definitely.
Okay, so let's try and wrap this up. The main takeaway from this deep dive seems pretty clear, doesn't it?
I think so. Swaraj Engines had a, frankly, exceptionally strong first quarter for fiscal year 26.
Yeah. Record profit before tax.
Significant growth in engine sales, driving solid revenue growth, too.
All underpinning their strong position in the diesel engine market, especially thanks to that key relationship with Mahindra and Mahindra.
Couldn't have put it better myself. The link to M&M's tractor demand seems very much intact and firing on all cylinders, you could say.
Huh. Okay, so final thought then. Given this really strong performance and that close M&M tie-in, what's a bigger picture question we should leave our listeners with?
Well, maybe something to mull over is this. What does this sustained strong demand for traditional diesel engines, highlighted by SEL's results and M&M's needs, imply for the wider Indian automotive component sector?
Especially considering
all the ongoing talk about the shift towards emerging technologies, alternative fuels, EVs, etc., in the broader auto world. How do these two trends coexist or interact, particularly in segments like tractors? It's a complex picture.
That is interesting. How does strong traditional demand balance against the push for the new? A great question to ponder.
Indeed.
Well, thank you for joining us on this deep dive into Swaraj Engines Limited's Q1 results.
My pleasure.
We hope this gave you a clearer, more informed view. Keep exploring the fascinating world of company financials, and we'll catch you next time on the deep dive.